Hello students and welcome to this explanation on investment property. Yet again another simplified example for us to just dig in and get a good idea of what we are supposed to do and how our questions should be answered. We can read together. The question says that Chelsea Limited acquired fixed property called Building 01 on 1 January 2013 at a cost of 100,000 Rand. It is the intention of the entity to rent the building to third parties upon completion. The following erection costs were incurred for the year ended 31st December 2013. So they show material, labor, and overheads that were required in order to complete the build of this specific building 01. It says at 31st December 2013, the construction of the property was not completed as yet. The fair value of the building was determined to be 1 million Rand at the date. The building was completed on 30 June 2014. The erection costs incurred during the 6 months amounted to 500,000, and the fair value of the building was determined to be 1.8 million at that date. The company did not succeed in finding a tenant during the period ended 31st December 2014, and the fair value at that date was 1,750,000. On 30 June 2013, the company acquired another building called Building 002 at a cost of 2 million Rand, and the building is used to earn rental income. On 31st December 2013, the fair value of the property was 2.2 million. On 1 July 2014, the management of Chelsea decided to sell the building 02. The fair value of the property was calculated to be 2.5 million. The asset was sold on 30 September for 2.6 million. It can be assumed that it is the accounting policy of Chelsea to account for investment property by applying the fair value model. In the required part, they say you need to prepare the journal entries for 2013 as well as 2014 in respect of the above mentioned properties, and you will get a mark for presentation skills. So typically when you have different buildings for different years, you get a mark for the presentation skills just because you've grouped them in a way that is easier to mark. In the additional note, you will see that they say you can ignore VAT and tax. You need to disclose all your calculations, and your journal narrations are not required. All right, wonderful. I think we should start then with 2013 and do Building 01 first. So I have opened a spreadsheet here, and we are answering then required A. And this will be calculations relating to the year end 31st December 2013, and we will first do calculations for Building 01. All right, so for Building 01, we can say on 1 January, we purchased this asset for 100,000 Rand. I just want to make sure we show this is the debit, this is the credit. So we're going to say we're going to increase the investment property asset, and we need to show the transaction. They do not say how it was acquired, but how it was acquired. So I'm going to say bank/creditor, and that was a total of 100,000 Rand. So this 100,000 Rand is in the introductory paragraph. All right, so during the year ended 31st December 2013, we have some construction that was done. So I am going to use that date, 31st December 2013. We had some construction that was done. And I will again increase my investment property. when construction is done, we are not improving upon the building. We are actually constructing more space, for example, within the building. So therefore, that is capitalized as part of the asset. Again, they don't tell you, whether it was paid for. So again, I'm going to say bank/creditor. And then I need to add together the costs that were incurred. It was a 400,000 for material, 200,000 for labor, and another 100,000 for our overheads. So that should be 700,000 rand. Then they tell us at the end of the year it wasn't completed, but the fair value at the date was 1 million rand. So we will also account for that. The current value of this property was the 100,000 that we've paid for it, and also the 700,000 rand renovations that we've done. So altogether, this asset is now worth 800,000 rand in our books. However, the fair value was 1 million rand. So it seems to me like that is a fair value adjustment upwards, which is a fair value adjustment income. So again, we're going to say we increase investment property 01, I beg your pardon. And then it will be an increase, so it is fair value adjustment income. And that would be the difference between the 1 million rand, which is the fair value, and the current 800,000, which is displayed in our books. So that gives us a upward valuation of 200,000 rand. Right, so that is for our building 01 during the year ended December 2013. So I just want to make sure that I say here that it is for investment prop 01. Then calculations and entries for the year ended 31st December relating to property number 2. Is then that it is obtained, it would seem, on 30 June at a cost of 2 million rand, and at year end the fair value is 2.2 million. So on 30 June 2013, we're going to have debit investment property 02. And did they tell us how it was paid for? It seems that they haven't, so I'm going to say bank/creditor. And they tell us that it was purchased for 2 million rand. Then we have a fair value adjustment upward because it is worth 2.2 million at year end. So therefore, I'm just going to have to use this again, but it will be a fair value adjustment income for investment property 2. And that is the difference between the 2.2 million fair value and the 2 million that we currently have in our books. The difference should be 200,000. Right, that is our journal entries as they relate to the year ended 31st December 2013. They also ask that we do calculations relating to the year ended 2014. So I'm just going to take my heading again and adapt it. So it will be 2014 now. So what is happening with our building number 1 or investment property number 1? They say it was completed on 30 June and they spent another 500,000 on it. the building had a fair value at this date of 1.8 million. The company did not succeed to find a tenant. At the end of the year, it was worth 1,750,000. Right, so now we're going to have 30 June 2014, and we are spending another 500,000 on it. So again, I'm going to use this entry, debit investment property, and now investment property 1, and the bank or accreditor should be created. We spend another 500,000 on it. Then they say the building is completed and the fair value is 1.8 million. So now we need to go and do a calculation. So the fair value at the beginning of the year was given to us, and the fair value on 31st December 2013, which is the same as 1 January 2014, is 1 million rand. Then we have now just booked some improvements and some renovations or completion. So the completion cost was another 500,000, which gives us a total of 1.5 million. The fair value at this point of completion is 1.8 million. And that means that we have a fair value adjustment upwardly of 300,000, which is the difference between 1.8 and 1.5. Just going to put my explanation in a little block. I need to account for this on the day of 30 June when it is completed. So it's going to be, you debit your investment property and you are going to increase your fair value adjustment income by 300,000 rand. At year end, it is valued again on 31st December 2014, and now it has actually been recorded at 1,750,000. So at year end, it has decreased slightly. So currently in our books, we have jacked it up to be 1.8 million. It should be 1,750,000. So we now have a fair value adjustment expense, and our investment property will be credited because it will decrease. It will decrease by the difference between 1.8 million and 1,750,000. That difference equals 50,000 rand downward. Right, so that is our entries relating to property 01 during 2014. We also have a property 02, so I'm just going to copy my heading again, and that is property 02. So let's see what is happening for it in 2014. We ended off the previous year by indicating that this property was worth 2.2 million rand. So we recognized a fair value adjustment income of 200,000 rand. Then they say on 1 July, they decided to sell the building. The fair value of the building was 2.5 million and the asset was sold for 2.6 million on the 30th of September 2014. Right, so now we need to dispose of this asset. So the first thing that we need to do is to recognize a fair value adjustment on the 1st of July 2014. So there we need to go and see the previous fair value of this asset was 2.2 million and now it is 2.5 million. So that is a fair value adjustment income. So again, I'm just going to use a shortcut and copy this, call it building 2. And this is now the difference between the 2.5 million fair value and the 2.2 million, which was the fair value at year end. And the difference there should be 300,000 Rand. Right, then we need to dispose of this asset. I believe the selling date was 30 September 2014. You are selling the asset, so you are getting money into your bank. They don't say whether it was sold for cash, so you can also recognize the debtor in this instance. And it is sold for 2.6 million. The current fair value of the asset, we need to remove the investment property asset, of course, and the current value of the investment property asset is 2.5 million. And it seems to me then that we have made a profit on the disposal of 100,000 Rand. Right, that was then the required part. We only needed to do the journal entries. This was quite a simple question, introductory. I hope that you have enjoyed this explanation and that it has highlighted some important principles that you need to understand in accounting for investment property. I will see you in our next video.